Well, our next guest questions the overall market's reaction to today's Fed decision. Dennis Lockhart was Atlanta Fed president during the financial crisis. Dennis, always great to get your take. You didn't hear dovish from him. Did you simply hear lack of hawkishness? Because I think lack of hawkishness in this environment is dovish.
Well, a lack of hawkishness may be dovish, but what I heard was a measured, fairly balanced, non-committal in many respects posture. The committee is feeling its way along now and for this year, and taking it meeting by meeting. I think for sure we'll see a rate increase in March, but after that, a question mark. I think Jay Powell was invited to give forward guidance and really didn't give much in the way of forward guidance. So, I thought it was a balanced approach, and therefore I didn't hear extreme dovishness. I just heard, some hawkish, some dovish kinds of statements, if you want to interpret things that way.
He was also very diplomatic in how he answered a question specifically about financial conditions and how they are looser these days. And the person who posed the question pointed to the stock market for one, rates coming down on the 10-year yield, et cetera. From the perch of a former Fed president, is the market reaction, is that something that the Fed actually watches? Do you think that that Jay Powell was glad to see the NASDAQ rally 2% off the back of his comments? I mean, is that the message that he really wanted to send?
Well, he's probably not happy with anything that you would interpret as easing, quite frankly, in the battle against inflation. But yes, the committee watches financial conditions, but I don't believe the committee thinks they can do much about financial conditions as determined by markets. And so they try to do their very best with the policy setting, try to depict the economy and to some extent give a sense of the future outlook and so forth. But they really can't try to get into a counterpoint with markets in order to tighten longer term rates, for example.
Mr. Lockhart, it's Karen Feinerman. Thanks for being on. So let me ask you, in terms of inflation and the labor market, what are the metrics do you think those two things have to get to for them to be able to not just pause, but even consider reversing?
Well, I thought there was a very interesting piece of information in this meeting, and that is that to some extent, Jay Powell dismissed annualizing the month-over-month numbers and concluding that we were at 2.5%. He went into some explanation that economists, and I'm sure that includes Fed economists, believe that there's a transitory element in goods inflation at that kind of annualized month-over-month 2.5% rate. And he seemed to settle on 4% as their sense of the underlying inflation rate. That clearly is too high. I think when they get to 3% or lower, then they can begin to think, conceivably begin to think about reprioritizing a little bit and pausing. But if they believe the underlying is 4%, that is clearly too high.
Dennis, when we think about the financial conditions, the market reaction, the fact that the bond market is pricing in cuts for later this year, I appreciate that the committee can't react and do a counterpoint with the markets with every meeting, but they must hate the fact that they're pricing in cuts, even though he said, listen, there's no expectation for cuts later this year. What would have been your communication strategy to say, if you were in his shoes, to say, listen, we're not cutting. We don't know why the market assumes we will, because there seems like there's a credibility problem here. And I think the Fed needs to have credibility in order to be able to effectively, get the point across.
Yeah. There were a couple of interesting moments in the press conference, one of which for me was he came out and he said, we have different jobs. We, the central bank, have one job, and the market practitioners have another job. And he was, in so many words, saying, I understand different perspectives. He also said, it would be ideal if the markets are aligned with the intent of policy, but the markets aren't aligned with the intent of policy. I think he did about as much as he could do to try to jawbone the markets into lining up with the Fed. At the same time, this is just an outlook based on what they can see today. I mean, there were a number of occasions in which he said, you know, if inflation comes down faster than we think, we'll react. And therefore, the markets may not be wrong at the end of the day. And I think he acknowledged that.
Dennis, when I got the notes, that one sentence jumped out at me, the notes from the pre-interview that you did with one of our producers. You said, as a shareholder, you're pleased the market had an enthusiastic reaction to the press conference. So you hold stocks. And so I'm wondering if, I don't know if this is taboo to ask a former Fed president, but I'm going to go ahead and ask it because you opened the door saying you're a shareholder. Do you trade your portfolio? And what is your view on the markets, given what you know about the Fed and where you think the Fed is going to go?
Well, I am very much long equities in my own personal money, and even at my advanced age, and I'm almost 100% equity. Having said that, I am really moving toward a passive portfolio with essentially ETFs and low expense ratio kinds of ETFs. So I'm actually transitioning at the moment, and that's. Therefore, I'm not going to take a position that I can predict the market. I'm just going to try to invest in America's long-term prosperity and long-term economic strength and leave it at that. 100%
equities, though, that's a bold statement. We just had a strategist from Morgan Stanley yesterday tell us that he's recommending bonds. He's telling his clients to look for yield.
all the advisors tell me that I've got it wrong, but that's been what I've been for years, and so I'm gonna stick with that approach.
Can I ask you one more question? That is, within this 100% equity portfolio, Dennis, you know, like what percentage is technology? I mean, are you like riding Meta with the 19% gain in the after recession? Are you cheering that on? I mean, what does the Lockhart portfolio look like?
It's pretty well balanced, actually. Okay. You know, I'm just not I don't believe I can be a stock picker. Or I don't believe most people can be stock pickers, and so I'm moving, as I said, moving in the direction of passive index funds. And it's balanced from small cap to mid cap to large cap growth value. I'm not believing that I can be smarter than the market for the coming years.
All right, fair enough. Dennis, pleasure to speak with you. Hope you'll come back on the show. Dennis Lockhart, former Atlanta Fed president.